Hi, everyone, and welcome back to the Your Money, Your Life podcast, episode 298 of the pod. Make sure wherever you're listening or watching, you like, subscribe, comment, five-star rate, and review. We're doing more content, folks. So we want you to stay engaged. We want you to tell your feedback as well. Like, let me know your feedback, what you want to hear more of, less of, especially if you're a client. We have over 460 across the nation and nearly 15 million that we're investing for these people. So make sure you stay tapped in with us. Let's jump into the market update. First and foremost, that's what we do every week. We want to talk a little bit about the big things that's going on in the market. So I already have our chart pulled up. The market's open now. I'm recording a little bit later than I usually do for Thursday morning, but the market is open. We're seeing a little bit higher today, a little bit positive today, barely by 0.2, much less than a percent. We're at 0.2%. Right now, the market increase on the S&P 500 ETF. Let's go for the week. For the past 5 days, we're a bit flat, almost 1%. We'll talk about why. There's a lot of things going on. There's trade war talks coming back in the market. There is China versus the US. There's some more volatility coming from that. That was probably the biggest news that affected the market in the past 5 days. Over the past month, we're up about a percent. In 6 months, very strong, and year to date, strong for a year to date. Again, we've talked about this so far. So nothing new for people that are like turning into the market update and saying, all right, what's going on? It's been the same old, really, for the past several months. And so let's take a look closer. Big tech stocks are doing well. NVIDIA, Broadcom, Taiwan Semiconductor. NVIDIA, which produces Taiwan Semiconductor, which produces chips for NVIDIA, raises 2025 revenue guidance to mid 30% growth from roughly 30%, and reiterated its plan to commit to 42 billion to capital expenditure. So they're growing. They're going to commit $42 billion to sustain and support that growth by capital expenditures. Salesforce also jumped 6%, marking the best performance among Dow members in the early trading. That's interesting. Salesforce, obviously a tech software company. It's in the Dow Jones. It seems to be in the Dow Jones, which again is just interesting, just based on what you think of the NASDAQ, holy multiple growth tech. So that's the big news of the market right now. Again, the trade talks is the big thing. So President Donald Trump last week threatened to place an additional 100% tariff on goods coming from China in response to the country's new export controls on rare earth minerals. The trade tone softened over subsequent days, but tensions increased again on Tuesday when Trump threatened China with a cooking oil trade ban. Investors are also keeping a watchful eye on the U.S. government shutdown. That's another big thing that we have to discuss. The shutdown still going on, right? And there was a TikTok I did that it said it's potentially going to get to the point where it's costing the U.S. $15 billion a day. So we'll talk more about that. But the stoppage has led to indefinite shutdown of crucial economic data releases. That's big for investors. The economic data releases jobs, all these different things. They're not going to be releasing them because they're shut down. So that's the biggest thing we have in the market update. Let's go into current news. First thing, let's talk right now about the government. And we were just speaking about the government. A judge has halted shutdown layoffs as admin details planned cuts. So the Trump administration was ordered by a federal judge on Wednesday to pause plans for further layoffs during the government shutdown. 8 agencies had already sent reduction in force notices to more than 4,100 staffers, while White House Budget Director Russell Vought said that up to 10,000 jobs could be eliminated. However, a senior U.S. District Judge Susan Ilston said that the administration may not have followed proper procedures in conducting layoffs and now has 2 days to provide further details on planned cuts. Each day of the shutdown is estimated to cost $15 billion. So again, this is a shutdown in the government, and it's because of Republicans and Democrats not able to agree on what they want to pass to further fund the government. And so that's why we're seeing it. So again, the people that are the constituents, which is all of us that are not in government, are the ones dealing with the shutdown. You got many people that work in the federal jobs that are losing their jobs, permanent cuts that the administration wants to do to some jobs. So really, really tough times. But, so we're kind of keep updated on this because, again, we're almost at 2 weeks I think we're at 2 weeks of the government shutdown, which is one of the longer ones we've seen. I think I did a TikTok on the length of shutdowns we've seen and how long they've One of the longer ones we've seen. So this is one that we have to keep an eye on because if it does continue, it could seep into the economy as well. Banks are slowing hiring as they prepare for an AI future. So this is an interesting story I saw on banks. So despite booming earnings, Wall Street's largest banks are hitting the brakes on hiring as they seek to retool their operations around artificial intelligence. This is according to CNBC. After reporting a 12% increase in the third quarter profit, JP Morgan, whose headcount rose just 1% in the period, has instructed its managers to avoid hiring. Meanwhile, Goldman Sachs CEO David Solomon says that the bank plans to reorganize itself around AI. While that process will likely plan out over long term, Goldman will constrain headcount growth this year. So people are saying, "Hey, we're going to find out how well we can use these tools. Can they make? Can they take do the job of two or three analysts?" Versus having 5, 6 analysts on the team. We can cut 2 or 3 of them because we can use these tools to do the modeling, to the inputs, to do everything we need to do when we're doing our pitch deck, right? And so the banks are reconsidering their model around AI, and a lot of companies are doing that. And they're pretty much saying, "Hey, we're going to freeze hiring for a bit, wait to see how this shapes out, and then we can go back to hiring if we need more," right? So that's kind of their plan for a lot of the big banks. That's going to affect younger people. The AI is showing, there's a study that's showing that it's really affecting younger junior positions, administrative roles first before it breaks into any others. The Fed Beige Book shows split in consumer spending habits. So the Fed Beige Book is a book that is kind of really just shows economic activity, and the Fed releases it. So the U.S. economic activity remained relatively unchanged in recent weeks, despite a cooling labor market, softened spending, and persistent inflation. This is according to the Federal Reserve's Beige Book, a survey of 12 regional business districts. The report did not reveal a continued split. The report did reveal a continued split in America's spending. Affluent consumers continue to splurge on luxury goods, while lower income earners have pulled back. With the Fed's next meeting fast approaching, policymakers have to rely on findings along with delayed inflation data to inform its rate decision amid other shutdown related delays. So interesting. Even the Fed's inflation data is going to be delayed. I want to look into that article, hitting the hyperlink, folks, because we want to see what they mean. So, okay, this was 5 days ago. The BLS announces CPI release date. The Bureau of Labor Statistics announced it will release September's Consumer Price Index report on October 24th, conducted a crucial piece of government business during the shutdown, citing anonymous sources. The BLS is recalling select employees to produce the closely watched measure of inflation, which helps determine the annual security cost of living adjustments. So they called people back that they had fired that were helping put this report together and said, "Hey, we need to put it back together." And it's actually going to be late. The numbers, you're right, the numbers should be coming out, I think this week or even the week prior, but now we're getting it on the 24th of October. So we're getting it delayed. That's quite interesting. Very, very interesting. That's due to the government shutdown and some layoffs and different things happening. Let's talk more money. The US gender pay gap just hit an unexpected milestone. For the first time in 60 years, the US gender pay gap has expanded for 2 consecutive years. The Washington Post reports the Bureau data, full-time female workers made just under 81 cents for every dollar a man earned in 2024. That's a drop from 83 cents in 2023 and 84 cents in 2022. Wow. Men's median income went up 3.7% between 2023 and 2024, while pay for women stayed stagnant. So that's interesting. I wonder what that is. That's incredibly interesting. Why would that be contracting for the first time in 60 years? Wow. I mean, I have to really dive into this because, again, this is news to me. Driving factors include lack of affordable childcare, okay, and strict return to work mandates. Oh, wow. Okay, so they're saying affordable childcare is not allowing women to get back into jobs that are maybe a little bit more um, task heavy and work heavy, but require someone to have childcare at home or have childcare buttoned up, or strict return to work mandates. I'll tell you what, I can see that one. I don't think women enjoy a commute as much as men do. I enjoy a commute, for the most part. It's not too long. You get some work done. You have to figure out where you're going. We're nerds, man. We like to figure out where we're going. Look, I'm looking at the GPS. You just imagine a dude and well, this is work related, but I'm saying, when they're trying to get somewhere in khakis, trying to figure out. But man, the strict work return to work mandates. So that's per the Post. So I mean, I think that's a really interesting stat. I mean, I think getting worse is not a good thing. I'm surprised to see it's 60 years that you have two consecutive years of contraction. But that's crazy to me. Those lifetimes. So this lady says, Alexis Gailey, she's a data reporter. She said these, and not may not sound by much, but over women's lifetime, those lost earnings compound. It can quietly strip away hundreds of thousands of dollars of dollars women might have otherwise earned, saved, or invested to achieve financial security. She said, we talk a lot about equal pay for equal work, but the wage gap experts say that that's only part of the story. The bigger issue, the hurdles that keep women from earning and advancing equally in the workplace, such as childcare costs and lack of paid family leave. The broken rung and gender bias. Oh, yeah, she's hitting the nail on the head there. That's crazy. I have to do a story on this on TikTok, so we'll have to post about this. Yeah. So we've hit a lot of the main stories this week, a lot of them. So I wanted to go over a couple other things that we shared on TikTok over the week to see if there was anything else. We did talk about the shutdown. I did a story about it. There's nearly 900,000 federal workers that are furloughed. And agencies like the IRS, EPA, and the SBA, they've slowed or paused operations, which is crazy. The longer this drags on, it could be an economic hit, and we've talked about that. We also did talk about how it's a tale of two economies right now. You're seeing a tale of two economies. On one side, you're seeing, AI stocks booming, the stock market's at highs. We can't lie about that. That's the truth. On the other side, you're seeing hiring at its lowest level since 2009. And people are saying groceries are more expensive. We can break that down, but people are literally saying groceries are more expensive. Job growth is down almost 60% year over year, and that's a massive number. Companies are freezing hiring and wages are flattening, and consumers do feel tapped out. So I think for most people, I'm giving the advice for everyone. You can't be saved by anyone else but yourself. Earning more is super helpful in these times, and I know it's hard to do, but you have to figure that out. And staying stable, staying at your job, doing a good job, because again, it's really, really tough times for people out there. And we have like a chart that is, really shows and breaks that down. The general public, is saying 47%. It's harder to buy groceries than it was a year ago. And we need to talk about China a little bit. China is now in a war of words with our administration, and they're going back and forth. We haven't even dug into the story about soybeans. Soybean farmers are hit hard because China has stopped buying soybeans from U.S. farmers, and that's a big thing that there might be a bailout. So there's a lot to discuss, and we'll be doing a lot of um, videos on this, especially on my TikTok at Delano Saporu. But yeah, just in general, again, I keep going back to this, everyone keeping very, very safe and stagnant in this time because it's really, really wild times. Um, we're seeing a lot of clients do something different, which is, saving to their set buy arrays was not different. That's something we always encourage, right? Like if you think about if you're self-employed, freelancer, creative, how do you save during these times? Well, if you don't have a 401k, you don't have to panic. You can do things differently. You just have to think and work with an expert that will help you do these things. So here for us, we work with a lot of people that are looking to save into their SEP IRA. Had a client that did a contribution just recently. And a lot of times, when saving, it's automating it. It's making sure that you're doing it kind of like you're paying your rent. It's the biggest thing because it pays off later. It 100% does. And that's the thing that people forget. It 100% pays off later. So I have to keep that in mind always. But in general, again, we're going to be sharing kind of the highlights of the economy every week, every day, because these are big, big things happening. So just stay tapped in because I know it's a lot, but stay tapped in. We'll keep sharing this stuff. Again, if you're going through tough times, make sure to reach out. Share this with family and friends. We want to help as many people as we can. We're at, you know, 460, 70 families worldwide being helped. And that is truly worldwide. London, Japan. So make sure you stay tapped in with us, and we will talk next week.